The
Institute for Justice.
The National Law Firm for Liberty.
I'm Melanie Hildreth, Vice President for External Relations at the Institute for Justice. I'm here with Rob Piccola, IJ attorney and special counsel to IJ's Four Pillars Society. Today, we're going to talk about a way to make the most of your IRA, hard-earned money that's been growing tax-free for years and that can stay tax-free with a gift to IJ. There are ways to use IRA and other tax-deferred accounts for charitable giving, both now and later, that mean more of your money is put to use by causes you care about and less is lost to taxes. Rob, let's start by talking about the impacts of IRA giving for those who are 70 and a half and older. That's the age where people have to start thinking about that money and making some decisions. Is that right?
That's right, Melanie. And the IRS, in its wisdom, has somewhat arbitrarily picked 70 and a half as the current age where folks have to take those what are called required minimum distributions from their traditional IRA accounts. That number and that age could change, and we will keep our donors posted on that. But for the time being, it starts at age 70 and a half, and it's just what it sounds like, a forced withdrawal of money from your IRA account.
And when the IRS says required, they really mean it because there's a penalty if you don't withdraw that money, isn't there?
Yes, a huge penalty, as in 50% of that distribution. It's really one of the most draconian punishments that the IRS has come up with to date. It's also important to point out that those required minimum distributions count toward your taxable income at your current tax rate. And that's assuming that the distribution doesn't jolt you into a higher tax bracket. It's something that's concerning for folks who in their 70s are often looking for ways to reduce their income, not to increase it.
Well, and that's why using those assets to make a charitable gift can be a great option. So there's something called a qualified charitable distribution. And using a qualified charitable distribution, donor 70 and a half and older can take money directly from their IRA and give it to a charity like IJ, and those funds meet that required minimum distribution. It could be all of that amount that you're required to withdraw. It could be some of it. And it doesn't actually have to be limited to that. It can go all the way up to $100,000 if people are feeling particularly generous.
And the good news is that the process is incredibly simple. All folks need to do is write to their plan administrator, let them know that they're interested in making that charitable transfer, and provide their account number and their information. And then for the charity, provide the charity's name, address, and tax ID number. Of course, we're hoping that folks will pick IJ as the charity of their choice. And it's as easy as that. Now, a word to the wise, when folks are thinking about when they would like to time this in terms of when that income would come in and hit their account, you've got to remember that the IRS says that it doesn't count until the check actually clears. And I know that some folks in their accounts now have the ability to write checks and do these things. Well, we're heading toward the end of the year. The time to do it is now. Don't wait till the very end, because unless it's cleared, the IRS is not going to count it, which is important.
Exactly. And, as you think about those tax consequences, one other note to consider is that you can take the standard deduction if you make a gift from using a qualified charitable distribution from your IRA, but you can't also deduct that amount if you do itemize. The real tax benefit there is not realizing that income, as you'd mentioned. You can't do both, not realize the income and take a deduction, or the IRS might not look too favorably upon it.
That's right. All things considered, for folks who have some financial flexibility in their retirement, these kinds of gifts can really be a sound way to both benefit a charity like IJ and to plan for your retirement. So we encourage you to talk to your tax advisor or to your financial advisor and think about what your overall retirement strategy looks like. But be sure to bring this up, because this is something that can really benefit, frankly, all of us.
And those conversations wouldn't be complete without thinking about the beneficiary of those accounts. And that's the later piece of the conversation. It's very important to take ownership of who you want the beneficiary to be, because the default for different institutions may be different. And that's true not just of tax-deferred accounts like IRAs and 401ks, but also of savings accounts, checking accounts, certificates of deposit. All of those will have a beneficiary designation form that you should look at, fill out, and make sure that the money is going where you want. And that's true both because it then allows you to make sure your wishes are expressed, but also because the tax consequences of leaving those tax-deferred accounts to certain beneficiaries can be pretty severe if they're leaving it to a child, for instance.
Well, that's right, because we have to remember that for that beneficiary, this counts as part of their income, their taxable income. So for folks in high tax states, we could see levels up to 40% between state and federal taxes going back to the IRS, not to mention the fact that the federal and state estate taxes could come into play with this as well. So essentially, we're looking at 4 different levels of taxation that are avoided when you make a charity like IJ the beneficiary. And then 100% of that money goes to fighting government overreach instead.
And that helps avoid the probate process as well when you use a beneficiary designation.
That's right. That can be a lengthy, sometimes contentious, sometimes drawn out process, and this avoids it altogether. And really, in addition to avoiding probate, it couldn't be easier. All you need to do is ask the bank or your administrator for the beneficiary designation form, file that paperwork, and you're done.
Well, that's a very helpful conversation, and it concludes our discussion today. I hope that it's been helpful to you as you think about creative ways to give. Gifts of retirement assets are very simple, but they make a big difference to IJ and our fight. Thank you so much for watching, and have a great day.